This is Economy Watch, what you need to know about New Zealand's economic life today. Brought to you by interest.co.nz.
Kia ora. Welcome to Friday's Economy Watch, where we follow the economic events and trends that affect New Zealand. I'm David Chaston, and this is the international edition from interest.co.nz. And today we lead with news. China is trying to get back on track to keep up with the US economically. First in the US, the number of initial jobless claims for unemployment benefits fell last week again, and by more than expected, to 181,000. In fact, there's been a consistent reduction each week since the end of July. There are now only 1.63 million people on these benefits. And American durable goods orders came in better than expected too in August. After an unexpected jump in July, they were expected to fall back sharply. They did, but not by anything like what was expected. In actual terms, they rose 7.5% from July to be level pegging with a year ago. The embedded year-on-year negative is now being extinguished. And capital goods orders rose in August too, with a 2.5% rise from a year ago. This too is a bright recovery. And there were no surprises in the US second quarter final GDP result, with their economic activity growing 3% real and almost double the 1.6% expansion in the first quarter. For the full year to June, there was $29 trillion in economic activity recorded, a fast pace of expansion for the world's largest economy. By some estimates, that 3% pace has continued into the third quarter. But it's not all good news, or even. The Kansas City Fed's factory survey retreated in its September review, even if expectations for future activity stayed positive. And again, there was a good support for today's US Treasury 7-year bond auction. It went for a median yield of 3.61%, down from 3.71% at the equivalent event a month ago. And that is despite secondary benchmark yields rising slightly today. And as expected, the Swiss National Bank cut its key policy rate by 25 basis points to 1% at their overnight meeting, a third consecutive reduction and pushing borrowing costs to the lowest level since early 2023 there. Aussie job vacancies continue to fall. There were 330,000 job vacancies in August, down by 18,000 from May, and well below the peak of 473,000 in May 2022. Their labour market stats show there are 623,000 unemployed people in the same month, of which 418,000 were supposedly looking for full-time work. The OECD says the global economy is turning the corner as growth remained resilient through the first half of 2024, with declining inflation, though significant risks remain. That's according to their interim economic outlook. With robust growth in trade, improvements in real incomes, and more accommodative monetary policy in many economies, they project that global growth will be at 3.2% in 2024 and 2025, after 3.1% in 2023. Global inflation is projected to be back to central bank targets in most G20 economies by the end of 2025. Headline inflation in the G20 economies is projected to ease to 5.4% in 2024, down to 3.3% in 2025. Container freight rates fell 7% last week from the prior week to be 160% higher than pre-pandemic levels, and back to levels we saw at the start of 2024. All the latest reductions were on routes outbound from China. Bulk cargo rates were up 6.6% last week to be 25% higher than a year ago. In China, Beijing has asked its 4 top state-owned banks to cover for it with lending that may not make a lot of commercial sense. Now Bloomberg is reporting that they're moving to bolster the capital in these key institutions. The amount of added capital required is enormous. And we're starting to see some improvement in some commodity prices responding to the Chinese stimulus program. For example, the copper price is back above $10,000 a tonne, which is approaching the upper limits of where it's been since its first rise in 2011. Iron ore or steel rebar aren't moving, but zinc is. The US Treasury 10-year yield is now just on 3.79% and unchanged from yesterday. But the price of gold will start today at $2,670 an ounce and up $9 from yesterday, and yet another new record all-time high. But oil prices have fallen another $2 to $67.50 a barrel in the US, while international Brent price is now down to $71.50 a barrel. The Saudis seem to have surrendered the idea that production cutbacks will juice the price in their favour. They are shifting to pump more and regain market share. And the Kiwi dollar starts today in a yo-yo pattern at 63.3 US cents and back up 60 basis points from this time yesterday. Against the Aussie, we're unchanged at 91.8 Australian cents, but against the euro, we're up 30 basis points at 56.6 euro cents. That all means our trade-weighted index starts today at 70.6 and back up 30 basis points from yesterday. And the Bitcoin price starts today at $65,167 and up 3.3% from yesterday. Volatility over the past 24 hours has been moderate at plus or minus 2.9%. You can find links to the articles mentioned today in our show notes, and you can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again on Monday.